Welcome back to the AlgoBot channel, where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. I'm AlgoBot, and today we're exploring a strategy called Self-Exciting Momentum Cluster. This is a momentum and trend-following approach built on a fascinating piece of mathematics, a self-exciting point process, the same family of models scientists use to describe how one event raises the chance of another. Over the next few minutes, you'll learn how it turns clustered price moves into a single directional signal, how it decides to enter and exit, and how it manages risk. Let's get started. So what exactly does the self-exciting momentum cluster expert advisor do? At its heart, this strategy treats large directional price moves not as isolated random events, but as members of a cluster. The idea comes from a branch of statistics called self-exciting point processes, first used to model how one earthquake aftershock raises the odds of the next, and later borrowed to describe bursts of activity in financial order flow. The reasoning is simple. One strong up move can make the next strong up move more likely, as buying attracts more buying and momentum builds on itself. To capture this, the strategy maintains two running intensities, one for upward moves and one for downward moves. Each bar, both intensities fade a little through a geometric decay, and whenever price makes a move large enough to count as a directional event, the matching intensity jumps higher. A move only qualifies as an event when its size, measured against the average true range, clears a volatility normalized threshold. Because it is scaled to volatility, the same logic adapts naturally across symbols and time frames. The traded signal is the net intensity, the up intensity minus the down intensity. This single number is directional by design. It climbs when same direction moves are clustering, and it decays back toward zero when the activity dies down. On top of this, a slower trend moving average defines the prevailing regime, so signals only take shape when they agree with the broader direction of price. This EA is designed for traders who are curious about applying quantitative, research-grade ideas to the markets, and who want to study momentum and trend-following behavior in a systematic, rules-based way. It runs on a single time frame of your choosing. A trending currency major or metal on the 30-minute or 1-hour chart is a natural starting point. Everything here is shared purely for education, to help you understand how the logic is built. It is not financial advice, and it is not a promise of any particular outcome. Let's walk through the mechanics step by step. On every completed bar, the strategy updates its two intensities. First, both the up intensity and the down intensity are multiplied by the decay factor, which by default is 0.85, so a little of the past cluster memory fades each bar. Next, the strategy measures the change in closing price. If that change is larger than the event threshold multiplied by the average true range, the bar is registered as a directional event. An upward event adds an excitation jump to the up intensity, and a downward event adds it to the down intensity. The default excitation is 1.0. The net intensity, which the strategy calls Lambda, is simply the up intensity minus the down intensity. To generate a signal, the strategy watches for a fresh crossing of this net intensity through an ignition level, set by default to 1.6. A long setup appears when the net intensity makes a fresh cross above positive 1.6, showing that an upward cluster has just ignited, and at the same time price is trading above the slower trend moving average. A short setup is the mirror image. The net intensity makes a fresh cross below negative 1.6 while price trades below the trend average. Risk is defined the moment a trade opens. The stop loss is placed at the entry price minus, or plus, the stop multiplier times the average true range, 1.6 by default, and that distance also defines 1 unit of risk, or 1R. The take profit sits further away at the target multiplier times the ATR, which defaults to 3.2, giving a reward to risk of roughly 2 to 1. The strategy also manages open trades actively. It uses a stop and reverse rule. If an opposite ignition appears, the current trade is closed and a new one is opened on the other side. There is also a dissipation exit. When the net intensity crosses back through zero against the open position, meaning the self-reinforcing behavior has faded, the trade is closed early rather than waiting for a full opposite cluster. Finally, once a trade moves 1R in your favor, its stop is lifted to break even and then trailed by the trail multiplier times the ATR on every tick, which is designed to protect gains and keep the equity curve shallow. Only one position is held at a time, with fixed lot sizing. Now let's look at the actual MetaTrader 5 code driving this behavior. At the top are the input parameters you can adjust in the strategy tester. EventThreshold sets how large a move must be in ATR units to count as a directional event. Decay controls how quickly the cluster memory fades each bar, while excitation is the jump added to an intensity when an event appears. IgnitionLevel is the net intensity edge that must be crossed to declare a signal, and trend EMA period defines the regime filter. Below those you can see the ATR stop multiplier, the ATR target multiplier, the trailing multiplier, the fixed lot size, and the magic number. Now to the signals. The long block reads, if cross up and regime up. Cross up is true when the net intensity has just made a fresh cross above the ignition level, and regime up confirms that price is above the trend average. When both are true, the strategy first closes any short, that's the stop in reverse. Then it sets the stop loss below the ask by the stop multiplier times ATR, sets the take profit above by the target multiplier times ATR, and calls trade.buy. The short block is the exact mirror. If cross down and regime down, it closes any long, then places the stop above the bid and the take profit below, and calls trade.sell. Notice how both sides are perfectly symmetric, and how the stop and target are always anchored to volatility through the ATR. That keeps the risk framing consistent as market conditions change. Let's bring the whole strategy to life on this illustrative chart. On top you can see price candles with the slower trend moving average drawn as the blue line. Below sits the star of the show, the net intensity oscillator, our Lambda. It has an upper ignition line at positive 1.6, a lower ignition line at negative 1.6, and a zero line in the middle that marks dissipation. Look at the opening candles on the left. Price is drifting gently lower, and the net intensity is sitting just below zero, but only mildly. The down moves here are small and don't clear the event threshold, so no real cluster is building. Notice how the market is quiet and directionless. This is exactly the kind of environment where the strategy stays patient and simply waits. Then the character of the market changes. On the fourth candle, price prints a strong upward bar that closes well above the trend average. This move is large enough to register as an upward directional event, and it lands right after a first up move, so the up intensity stacks quickly. Watch the oscillator. The net intensity leaps and makes a fresh cross above the positive 1.6 ignition line. That fresh cross is the signal. Because price is also above the trend moving average, both conditions line up and the buy entry marker appears. An upward cluster has just ignited. From here, the buying feeds on itself, just as the model anticipates. The next candles continue higher in a clean run, each one building on the last, and the net intensity stays elevated in the up cluster zone. The strategy holds the long as the trend extends. As price pushes into new ground, the trade reaches its take profit target, and you can see the take profit marker where the position is closed. Remember, the stop had already been lifted to break even and trailed once the trade moved one or in favor, so give back was kept tight the whole way up. Now watch the right side of the chart, where the mirror image plays out. After that peak, a strong downward candle appears and price rolls over. This down move is large enough to count as a downward event, so the down intensity jumps and the net intensity begins falling toward zero and then below it. As price slides back beneath the trend moving average, the regime filter flips to the downside. On the candle where the net intensity makes a fresh cross below the negative 1.6 ignition line, both short conditions are satisfied. A down cluster has ignited and price is below the trend average, and the sell entry marker appears. From there, the selling clusters in the same self-reinforcing way. The following candles step lower, the oscillator holds in the down cluster zone, and the strategy rides the move. Price reaches a fresh low and the short take profit target is met, closing the trade at the second take profit marker. Notice a couple of things about how the exits are wired. If, instead of running cleanly to target, the net intensity had crossed back through the zero line against an open trade, the dissipation exit would have flattened the position early. The strategy reads that as the cluster running out of energy. And if a fresh opposite ignition had appeared while a trade was still open, the stop and reverse rule would have closed it and opened the other side in one step. The take profit sits at 3.2 times the ATR, while the stop sits at 1.6. So each setup is framed with a reward to risk of roughly 2 to 1. Put together, the fresh ignition, the trend alignment filter, the dissipation exit, and the volatility-based trailing stop are what give the strategy its structured, methodical character. Let's wrap up. Today we explored the self-exciting momentum cluster expert advisor for MetaTrader 5. We saw how it borrows the mathematics of self-exciting processes to track clusters of directional moves, how the net intensity supplies both the signal and its direction, and how it aligns entries with a trend filter while managing risk through ATR stops, a dissipation exit, and a trailing break-even stop. Remember, everything in this video is for educational purposes only and is not financial advice. Trading carries real risk, and losses are a normal part of it. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with strategies you'd like us to cover next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.